Good morning, my wonderful students. My name is Mrs. Omidiji, and I'm here to teach you business studies. The topic we'll be treating today is source documents. But before we go on, I would like us to know that at the end of the teaching, the student should be able to define what source documents means. Number two, to list at least 5 types of source documents. And the last learning objective is to differentiate between cash transactions and credit transaction. What is source documents? Source documents are the first books in which daily business transactions are being recorded into. There are various respective books that source documents are being recorded into. They are the first books in which they are being recorded into. And when you look at it, you want to know what are the uses of source documents. Source documents can be used to record accounts, several accounts. There are so many books that have been recorded, so many books that transactions have been recorded, and you can transfer these transactions into subsequent accounts. Take for an instance, trading accounts and balance sheet. Another use of source documents is that they can be used for reference purpose. Some transactions must have taken place long time ago, for like, let's say 10 years, and a matter arises and there is need to make reference back to the transactions. You can use source documents to make reference to it. You'll be able to know when the transaction takes place, when the transaction took place, the date, the quantity of goods purchased, and the amount at which it was being purchased. Then that will take us to the next subtopic, which is types of source documents. Number one, we have invoice. But before we go on, I want you to note this for basic clarity of today's teaching, that there are two personalities that need to be well known. They include the buyer and the seller. Invoice is a document that is being issued by the seller to the buyer whenever there is transaction between them. And invoice can be categorized into two. It can be categorized into sales invoice and purchases invoice. Invoice comes in 2 copies of the same items, but it depends on whoever is holding it that will determine the name you will call it. The invoice with the seller is called sales invoice, and the invoice with the buyer is called purchases invoice. Our next source document is receipt. Receipt, it is usually issued by the seller as well, given to the buyer to show as an evidence of payments made by the buyer to the seller. Receipts can be shown at any point in time to show that the goods belong to the buyer, that it has been paid for. And the next one is cash register. Cash register is usually used at the supermarkets, and this is used to record all the items purchased. It will be recorded and it's going to be printed out for the buyer to make payments and have their goods. The next one is credit notes. Credit notes are the documents that are being issued by the seller to the buyer, most especially when the buyer returned the goods. I need to give you more clarification on that. I've always told you that in business studies, we are operating as we are living our lives. You know, the buyer went to the seller to make some purchases. and have paid for the goods, left the place. The seller had recorded it, collected the money, and made the record clear. Later, when the buyer got home or to his shop or to his office, discovered that some goods were not okay. When he discovered this, he will not keep the goods with himself and count that as his own loss. No, he would rather return it, and for the seller's account to be balanced, he is going to issue credit notes to show that the money you paid for initially, some goods have been returned concerning it, and money have to be returned back to the buyer. And credit note is usually used to correct the error of overcharge. Then the next one is debit note. Debit note is equally issued by the seller to the buyer when the error of undercharge is to be corrected. Take for an instance, when the goods that's supposed to be 5,000 naira was charged to be 2,005. To correct the balance of 2,005, debit note must be issued. Then the next one is voucher. Voucher is a document that is used for approval of payments. It can be cash, it can be check, but it is a document that is used for approval of payment. The last but not the least is check. Check is a written order to bank for payment of money. I would like you to know that check is an instrument used by bank, and the checkbook is usually being given to their customers, and the customers will in turn issue out the check to their own various customers, returning the checkbook or the check leaflet to the bank, giving them the order to make payment for whoever's name is written on it. It can be an individual name, and at the same time, it can be a company's name. That is an example of checkbook. And that will take us to the next subtopic, which is differences between cash and credit transaction. Cash transaction, like I said, when you make purchase of goods and you pay immediately, it is called cash transaction. So there is cash payments, immediate cash payments in cash transaction, but in credit transaction, there is no immediate cash payments. Instead, the payments will be postponed or deferred. I want you to get familiar with the word deferred. When money is not being paid immediately, it is called deferred. Then receipt is issued. I told you receipt is an evidence of payment. So when you have made payments, receipt is issued immediately to show as an evidence that you have made payment for the goods purchased. Then in credit transaction, receipt is not issued. Take for an instance, if receipt is being issued in credit transaction, it shows that money has been paid. Meanwhile, money has not been paid. So the receipt is not issued in credit transaction. And in cash transaction, the book that you will open is cash book. Once there is cash transaction, you record the cash transaction in cash book. But in credit transaction, you record the credit transaction in the book called journals. And that has brought us to the end of the lesson. But before I end it finally, I want to give you a recap of what you have been taught. I told you that the topic for the day is source document. And I've taught you that source document is the first book that transaction is being recorded into. And there are some uses of source documents. We use source documents to record accounts. We use source documents as a reference purpose. And there are some types of source documents, include invoice. It includes invoice, receipts, cash register, debit note, credit note, voucher, and check. Then differences between cash transaction and credit transaction. Cash transaction, payment is made immediately. In credit transaction, payment is being postponed or deferred. In cash transaction, receipt is being issued, but in credit transaction, receipt is not issued. And in cash transaction, you open cash book, and in credit transaction, journal is the principal book that you will open. The assignment for today's topic is in your notes that have been uploaded to the school website. Download it and do the assignments. Stay safe and God bless you.